Good afternoon and a warm welcome to you all to our CKS webinars. My name is Natharoun Ngo. I'm the CKS director and I'm also the moderator for today's webinar. The Center for Khmer Studies, CKS, promotes quality and independent research, teaching, and public service in the social science and humanities in Cambodia and the Mekong region. The research this webinar introduced you took place thanks to Ponlok Chomneh, a very innovative program funded by the Australian Department of Foreign Affairs and Trade and managed by the Asia Foundation. Thanks to Ponlok Chomneh, CKS has been able to create a safe space and work with a talented Cambodian researcher, Ms. Phasy RES, who took for the first time the lead role in the conduct of this important research. She has demonstrated academic rigor, intuition, and great perseverance and patience in the development of her own independent research framework and the collection and analysis of her field data. This research documents microfinance borrowers' experiences of loan restructuring policies on the ground. It examines existing microfinance mechanisms that support borrowers who have been struggling to meet their debt repayment obligations prior to and during COVID-19 pandemic. The research also aims to discuss what can be done to better protect the most economically and financially indebted households. I'd like to say a few words about Ms. Phasy RES. She's a PhD candidate in anthropology at University of Paris 1, Panthéon-Sorbonne in France. And she's also currently a research fellow with CKS. And her current PhD is examining the material and symbolic relationship between indebted households and their land. And it analyzed the notion of land security over time. Our webinar today is organized on Zoom and on Facebook Live. So welcome to all of you that are present on those two platforms. The presentation and discussion are recorded and they will be made available on our website in the coming few days. I'd like now to invite Phasy to present her study, the findings that she got, and to engage hopefully in a very fruitful discussion that I will be moderating. Thank you very much, and Phasy, the floor is yours.
Thank you, Natharoun, for the introductions. So I just want to repeat a few words from him. So this research, before moving into the finding, I like to, this research project is funded by the government of Australia and the Ponlok Chomneh, which is managed by the Asia Foundations. So first, let me briefly walk you through the research context so that you can understand why this research project is needed. Prior to COVID-19, based on various actors' research study, household over-indebtedness is considered as one form of the economic vulnerabilities. And knowing that COVID-19 crisis has disrupted the flow of the economy, such as causing large-scale job losses in key sectors, this could mean that the level of poverty and vulnerability can only increase. All of us are more or less affected by COVID-19, but we hypothesize that households with outstanding loans to repay is going to face more challenges. This led us to the research questions and objective. Using consumer protections as a scope in looking at the intersections of these vulnerabilities, this research asks, how has COVID-19 impacts households with outstanding loans? And the second question, how has financial actor responded to the crisis? In our research, when we talk about consumer protections, we focus on the accessibility and availability of the supporting mechanisms that are available for households who are struggling to meet the debt repayment obligations. So keeping this in mind, our broader goal is to propose evidence-based suggestions for policymakers, financial institutions, and development actors, so that the economically vulnerable households are better protected during and after the COVID-19 crisis. With this broader objective, this research project is designed toward a more policy-oriented pieces. So before answering the two research questions, I would like to tell you how, where, when the data are collected and who we talk to. We conduct interview with borrowers and financial institution representative, mainly with the loan officer and brand managers, and the numbers of each interview is you can see on the slide. And the duration of the research is from June to October 2020, keeping in mind that back then Cambodia doesn't have many COVID cases, and there was 0 case of COVID-related death, which is now, it's I think about 60,000 cases of COVID-19 and thousands of deaths, about 1,000 of deaths. And the location of the research study is seen on this slide, and the employment of the employment sector of the household that we selected for our research study are from 4 main sectors: garment, tourism, agriculture, and cross-border migrations. So when we say in an attempt to answer the first research question, how has COVID-19 impacted borrowers? What we actually looking at? First, we looking at the income loss among our participants. Then we want to know their responses to the income loss. And the third, how does this response tell us about the level of the vulnerabilities? So in the next 2 slides, I'm just going to show you the income loss in garment manufacturing and tourism sectors. But if you want to learn more about the impact on other sectors, agriculture and migration, you can post the questions in the discussion sessions. So in this pie chart, it was calculated from our 23 interviews, keeping in mind that 2 was dismissed workers. This means that during the time of our interview, 2 workers lost their income 100% from the garment sectors. Out of this, we have 21. So 20 out of 21 workers share that their income lost by 1/3 due to the lack of overtime work. So this makes it difficult for impact workers to, especially those who themselves or their family had debt to repay. They have to juggle between rent, food, debt repayment, and family expenses. As in the tourism sectors, there are those who are employed and those who are self-employed. Those who are self-employed, such as tuk-tuk drivers, souvenir seller, describe their income loss as high as 90%. The 90% is more to describe their feeling of loss. As you may see in the table, the actual income loss can be lower or higher, depending on where they work. So in order to compensate the income loss, our participants seek temporary works in the constructions, in agricultural sectors. However, at the time of the interview, some of our participants, both borrowers and financial institution representatives, share with us that it was difficult to find this temporary work during this crisis. One needs to know someone in order to get some works. It is hard for all of us to lose the income partially or completely and all of a sudden like this, but it's even harder for those who have outstanding loan to repay, because the demand for money is much higher. So then lead me to explain what happened when indebted household could not earn the amount of income that they expected. It can be due to various reasons. For example, in this case, COVID-19 crisis, but it can be natural disaster or any other forms of economic shocks. For the simplicities, as you may see in this slide, we categorize the level of vulnerability and insecurity into 3 zones. The shade of the purple color represents the intensities of household vulnerability or the economic insecurities. However, it is important to keep in mind that in reality, the boundary might be blurred and each coping strategy might have its own harmful consequences. So at the time of our interview, keeping in mind that at that time, we don't have so many COVID cases, there were not many households were actually in the zone 3s that's categorized here. However, due to the prolonged COVID-19 crisis, we expect more households with outstanding loan to fall into zone 3s. So these are the existing legal framework, national and international guidelines, but I'm just going to mainly focus on loan restructuring policy as it specifically emerged during the COVID-19 crisis and as a national response of financial institution to COVID-19 crisis. But I'm just going to highlight quickly the international guidelines on the 5 points of consumer protections at COVID-19 times. You can access this slide after this presentation, so you can learn more on your own about the detail of this each point. And the 7 consumer protection principle that was initiated about a decade ago. So loan restructuring policies on papers, the National Bank of Cambodia have suggested 9 options. These are the 9 options that they have suggested. But since it's not clearly defined and there are few directions from the National Bank of Cambodia on what it should involve and who should receive what options, absent of this guideline, financial institutions have to select their own responses to the COVID-19 crisis. The financial institution with which we spoke to note that they offer 3 main forms of restructurings: payment holidays, period extensions, and grace periods. Payment holidays is, so the borrower granted a payment holidays, they're required to repay loan. They're not required to repay loan at all time for specific periods of time. Then the interest payment associated for the period of time will be added to the leftover principals, and a new repayment schedule will be issued at the end of the payment holiday. So with the period extensions, it's simpler. Borrowers' loan period are extended so that the monthly payment is reduced to a level within the borrower capacity to repay. And grace period is borrowers granted a grace period have the option just to repay only the interest amount with a specific period of time. So this allows them to minimize monthly repayment and not pay down the principal for the durations of the grace period. And there are another one, which is leniency. Leniency is referred to the bank now, especially during the COVID-19 time. The bank is more flexible in terms of allowing borrowers to repay late without issuing any financial penalty. as long as the date of the repay, as long as it's less than 30 days. So drawing from our interview with 119 borrowers and 34 financial institution representatives, the main form of the restructurings that are given is grace periods. And from our interview, 23 receive some forms of loan restructures, and among the 23, 16 receive grace period options. So to sum up, just want to briefly talk to sum up the mechanism for the debt distressed households before, during, and what will be expected after the COVID-19. So I would just want to highlight two things, to discuss two things: internal refinance and write-off policy. So as you can see in the tables, the pre-COVID-19 time, the common mechanism for debt distressed household is internal refinancings or reloaned. So what is the internal refinancings? Internal refinancing is the practice where an additional loans was granted to borrowers in order to repay the old loan provided by the same financial providers. This practice has been criticized for increasing the level of household indebtedness, and it is generally viewed as a problematic practice from a consumer protections point of view. So internal refinancing loan can lead to something like this in the case of BOPAR. So the loan side can get bigger and bigger from one cycle to another. I also want to briefly talk about the write-off policy. Write-off is when the debt is being cancelled. In Khmer, we say luk chao. This policy is existed on the paper, and it is varied from institution to institution. At the time of our research, debt write-off is not systematically done due to the fear that borrower will purposely default. Drawing from our interview with a representative, write-off is mostly done when they can no longer contact borrowers, co-signer, Natharoun, or borrowers' close kin, sạch nhiệt. Although the loan is being write-off, borrower don't know this because financial institutions fear that if borrower know this, it can encourage others to purposely default. Of course, the implementations of the write-off is a tricky one, but I personally think that write-off policy should be implemented systematically, and COVID-19 crisis should be a wake-up call for the financial institution to really find a way to implement these policies systematically. So on the ground, we talk to, how do people or borrowers or household with outstanding loan feel during the time of our interview, and keeping in mind that, again, at that time, we don't have so many COVID-19 cases, and there was 0 case of COVID-19 related death. Even back then, there is a sense of fear and confusions among indebted households. The sense of fear and confusions can be understood that it's probably from the imbalanced power dynamics between borrowers and financial institutions. The power here is in Foucault's sense. It's referred to power and knowledge. In this case, the financial institutions have more power in a sense that they are in a position in deciding what kind of information they let their borrower know. For example, the information of eligibility for loan restructures, the forms of loan restructures, e.g. holiday payment, period extensions, and grace periods, and who is being considered as COVID-affected households. So the feeling of unable to decide and not knowing what kind of supporting mechanism that indebted household or debt distressed household can seek, or these create the feeling of fear and confusions. So the second thing that I like to raise is the feeling of CAD in Khmer, or the financial loss. These derive from the grace period options. As I have discussed in my previous slide, the main approved form of loan restructuring is grace period. And drawing from our interview with borrowers, many feel that these options is cut, or it's increased the cost of their loan in the total cost of their loan in the long run. As a result, at least 7 interviewed borrowers rejected the options, which is the grace period options, when it was offered. So these are the concerns around the loan restructuring implementations. I would just highlight a few here. So there is a non-consensual understanding on how loan restructure might affect credit history. Some officers said it won't affect. Some, especially the field staff, are worried that loan restructure is going to affect their client credit histories. And the second point is that not all form of loan restructuring policy or options were made aware or made available to affected households. Most made available option for affected household is grace period, which I have already presented in the previous slide, that this period, these grace period options increase the total cost of loan for borrowers in the long run. And the last ones, not all affected households receive loan restructure due to proxy borrowing practice or geographical unavailabilities. Proxy borrowing practices refer to the borrowing practices that the name on the loan applications and those who actually earn to repay are different people. So when the income earners are affected, but then the name on the loan applications were considered to be not affected because they were engaging in farming activities or they are residing in the geographical unavailability, then the loan restructuring requests can be rejected. But again, these decisions can be varied from institution to institution. So despite the concern and issue that I have raised around the loan restructuring implementation, we found that loan restructuring in combination with the government cash transfer programs through the ID pool are effective in preventing vulnerable households with outstanding loan to not fall into the zone 3s and beyond. However, the concern is that at the time of the interview, not all affected households who were indebted received the combination of this support. So in order to protect borrower from falling into the zone 1, zone 2 or beyond, or in this slide to push the arrow, the red arrow upward, we would like to propose some ideas for policymakers.
Yes, I'm sorry to interrupt you. It looks like we have a small technical issue. The slide have disappeared. So the team, I think, is working on it. Okay. So maybe waiting for them to maybe bring back the slide on the screen. I will maybe raise some of the questions. There are already a few questions from the participant, Phasy. Okay.
Okay.
And so there is a general one that relates to the methodology. So I'm going to share that with you. And the person is asking what drove the choice of the different interviewees, and why education sectors and the teachers were not included within the choice that the research study made.
Why
their
the choice
salary,
of the teachers?
Why teachers were not included into the target interviewees that the research team met?
Government teachers or like private school teachers?
Yeah, I think the person may refer to the public sector teacher, since he refers to a very low salary level.
Okay, thank you for the questions. So we decide on the 4 sectors. I will just repeat the government tourism. The government and tourism mainly guided by the National Bank's circulars, which in the circular, at that time, March 27th, they prioritized 4 main sectors that are eligible for the loan restructuring policy: the government, tourism, and constructions, and transportations. So using the national banks as to determine our scope, we decide to choose 2 from that, because we want to, keeping in mind that the main goal is we want to see how the loan restructuring policy are being implemented. So therefore, we need to go and talk to those who are eligible for the loan restructuring policies. But from my previous experience working with the migrations and agricultural export-oriented, okay, for the agricultures, we focus on the agricultural export-oriented because we thought that because the border is closed, they will be causing disruptions in the import and export activities. So that was the hypothesis that we have. So we decided to choose the agricultures, the crop-oriented agricultures. And for the migrant workers, we know that when they are those who migrate seasonally to work mainly in Thailand. So when the border is closed, we also think that they would be, the source of income would be affected. Like we said in our presentation, when we say impact, we want to see the income loss, like how does the COVID-19 create cause the income loss for the households. And these 4 sectors seem to be like most affected economically in terms of like how the employment activity has been completely disrupted by the COVID-19 crisis. And that's why we choose the 4 sectors for our studies.
Thank you, Phasy, for your very comprehensive answers. I'd like to ask Sung-hee and Samadi, my colleagues, if the presentation can be now put back online on the screen, so that Phasy may pursue her presentation. Okay, thank you for your patience to all participants. And Phasy, we have a lot of good questions that I will ask maybe toward the end of your presentation that relates to the policies that are applied, the level of debt, the responses from the different households. So I will share that with you. Okay, so we are back. We are back to the slides. Is that the correct slide, Phasy, that is on the screen right now? Yes. Okay. Good. Perfect.
Okay.
So the floor is yours.
Thank you, Song-hee. Okay. Thank you. So I will just repeat what I said for this slide. So despite the concern that are being raised around the loan restructuring implementation, we found that loan restructures in combination with the government cash transfer program through the ID pool actually is effective in preventing vulnerable households with outstanding loan to fall into the zone 3 and beyond. However, the concern is that at the time of the interviews, not all affected households who were indebted received the combination of this support. So in order to protect borrowers from to falling into zone 1, 2, and 3, or to push the arrows upwards, as you can see in the slide, we would like to propose some ideas. So these are the possible responses that relevant government agency and financial institutions can take immediately. I'm not gonna read it through. Just gonna, for example, maybe clearly communicate to client that loan restructure does not affect their credit histories. And also like enhancing the grievance mechanisms and include it as early as possible, maybe at the time of the application process, like all the supporting mechanisms that borrowers can have. So when they are struggling to repay, they know where to go and what to seek. And these are the ideas that can be taken in the midterm and long term. And I think that it's good if we can keep the loan restructuring policies even after COVID-19, because I think the loan restructuring policy, since it's like emerged at the time of COVID-19, when it comes to the implementation, there are a lot of confusions among the field staff, those who carry out the policy. So it's good if this policy can be kept so that the field staff become more and more familiar with the mechanisms, and the policy can also be improved through learning about the issues that drive from the implementation process. And I just want to highlight the personal bankruptcy laws. I think that's really important that we as a nation start to think about or to establish the personal bankruptcy laws, so that distressed household can have, so that there is another choice for that distressed household, so they don't need to engage in what we say like more unacceptable coping strategy that can put them in a more vulnerable positions. So that's it for my presentation. Thank you so much for your attention, and I would like to hand the floor back to Natharoun, and looking forward to any questions, concern, or anything you need me to clarify. Thank you.
Thank you very much, Phasy. And I know that the research report that you led is really rich in terms of content. So congratulations for being able to summarize all that information in a short presentation. So I will also invite all participants to download the report, if not already done. It is available in English and in Khmer from CKS website or from the Asia Foundation on Nokchumne, and it's called Policy Pulse. So both websites, you can find the report for download. Okay, so it is good because we have quite a good time to have a discussion now, a Q&A, and maybe I think yeah, it's good. So I'm going to bring you one question related to the write-off policy. Okay, and our friend Chiesop here would like to know how often that is practiced in the COVID-19 context.
Drawing from our, I thank you for the questions of this write-off policy, and drawing from our 119 interview, keeping in mind that at that time was July to October 2020, we didn't meet anyone, or we didn't get to meet with anyone who actually received these debt cancellations or write-off.
Yes, thank you, Phasy. Another question related to basically the coping mechanism. You know, you shared that several households kind of adopted different livelihood strategy to help them with the loan repayment. So how much you felt those different livelihood strategies, and I know that there are many, but what is your opinion in terms of how it was useful in terms of helping them repaying the loan overall?
Do you mean the coping strategy or the forms of loan restructuring policies?
No, I think it's the question is really looking at the livelihood strategy that the households are undertaking under COVID-19 in order to help them repay their loan. So, you know, the different measures that themselves, like for example, looking for another source of income, if they cannot migrate anymore, you know, to Thailand, how do they cope with it? So how do they adapt their livelihood strategy?
And the question is how those strategies helpful?
Yes, how it helps the vulnerable household better repaying their loan within the sample of people that you have met.
Okay,
how many of them really? Yes, I know it's a complex question but maybe you can take a few examples, you know, that you have used within your research and highlight. In some cases it was successful, in some cases it didn't work so much.
Okay, I will try to answer these questions. So I think keeping this in mind that, okay, you have the debt to repay and household have no idea on no other option that, you know, they debt can be, I don't know, like everyone have this thing in mind, like they have to repay their debt. So then they have to find a way to make sure that they can repay their debt, because there are a lot of there are many fears that if they cannot repay on time, they won't be able to get access to future loans. Therefore, they engage in different coping strategies, like I have presented in, like I have highlighted or discussed in this presentation, that this coping strategy is divided into the 3 zones. Like the first thing that people do is to seek interest-free loan from their parents or their siblings in order to repay the loan. And when there's like, when the resource in the close kin is exhausted, the financial resource in the close kin is exhausted, so then these can be taken not in a trajectory like that. It can be taken as a combination. For example, they can borrow the money from the parent or sibling, which is normally free of interest, and they also can do it at the same time, like deplete their savings or reduce or change the way they consume, the way they eat. And if all of these still doesn't enough, maybe because it's now, let's say if the crisis is 3 months, maybe this is sufficient to allow them to repay and also to support themselves. But then, like when it's go longer, they have to borrow from, let's say, informal money lenders. And then the last thing that people don't want to do is to sell their productive assets, mainly land, or like migrate irregularly despite the borders closures, or send their children to work, or children voluntarily going to work. This is something that households don't want to, probably don't want to engage. And in terms of, I don't know if effective is the right question to this, but what we want to highlight is that these coping strategies, even though we put it in zone 1, zone 3 like this coping strategy itself have its own negative consequences. I don't know if I answer the questions.
So to me, I think I understood it. I think it was clear to me, but maybe to the person that have asked the question, if the person has any follow-up, then please drop a question in the chat, and I will pick it up. So I will maybe move on to a specific question related to the refinancing mechanism. Okay, Phasy? And the question is whether there is a legal maximum to which a household can refinance. So that's the first question. It's quite technical. I don't know if you have not the exact figure, but you know, if not an approximative value, and if not, this is something that we can look after and answer to the person later. So the question is about the maximum value or the maximum ratio for refinancing for household. And then the follow-up question related to that is as well, and when does the refinancing stop? I suppose maybe the person asked if there can be a repetition of the refinancing.
Okay.
I guess, because I mean, if not, the refinancing stop once the person has completed the whole, or maybe the condition of the, like in terms of time, maybe, you know, to what extent the refinancing can be valid as an option, you know, is there a deadline? Maybe that's what the person wants to know.
For the threshold of, or threshold legal calculations of what is the maximum they can do the internal refinancings. I don't remember the exact calculations or the exact number, but I can infer you to, I think, on the procast or regulations on credit grading and credit risk and credit grading, if I remember it correctly. And there, I think they have the formulas to calculate what is the threshold for a financial, to guide the financial institution, what can be called, as they call it, green refinancings. Like if it's below, if it's within that amount or threshold, it's acceptable. But if it's beyond that, it's not acceptable. But the statistics, I think the statistic done by, so it was like more than, it was not sustainable the way we do it, because I think more than 50% of the loan was refinancing, something like that. I don't remember the exact percentage, but it's in the report under the mechanisms sections.
Yes.
And to answer the second questions, when does the refinancing stop? I think I give one example in this presentation in the case of Bopa, if you know, like the big circle, like the circle become bigger and bigger from one cycle to another. So in her case, like each time her loan is bigger than the second, because the family engage in growing mung beans, and every year they have to pay some principal, and then they take our new loans. So in her case, the refinancing never stopped, and she decided to stop. The family decided to stop on her own, like we don't want to take more loan. And after they did, so from 250 to 4,500, when they reach 4,500, they stop taking out the loan, and they decide to not engage in the mung bean farming anymore. So yeah.
Yes, thank you, Phasy. Okay, so this one is a question related to the microfinance institution themselves. Maybe the information will not be available, and in that case, you can give us your sense, if you have one, on the correlation or the relation between the level of profitability of the MFI. So let's say maybe we can interpret it as, you know, the size of the MFI, or its presence, its footprint in Cambodia, like how many and how big the operation are, and the level of support that they provide to clients in difficulty. So are the biggest one the most successful one? And there are many different criteria to qualify what success means, but do you see a relationship between those big one and successful one, which may make or not a high profit, and the quality or the number or the readiness of loan restructuring policy made available to their clients in need?
Thank you for the questions. Well, okay. It's a tricky questions, and I would say, like, I would not just focus on the loan restructuring policy. I think loan restructuring policy is just like a small thing within the sectors that can be done or can be improved. So that's why, like, this research is I think this type of research is needed, because we feel that the sector is making a lot of money, and while the level of the support for the clients is still like very limited, and that's what we want to like to maybe engage policy in terms of like discussing and what can be done more in order to provide supporting mechanism especially for those who are struggling to repay, so that they don't need to engage in what we say negative coping strategy. We don't want to see a situation that when you can do something to make their condition better, and you won't do it, like, I don't know if I answer the question.
Yeah, I think you did, Phasy. I think that since
you have anything to add?
I think it's difficult to answer that, because your research didn't really look at financial performance or, again, success criteria of MFI, and then try to correlate once we would have known, if we would have access to that type of data, like financial performance data, and then looking at the performance in terms of supporting solution provided by the same MFI to the panel of participants that were interviewed within the survey. This did not happen, right, Phasy? So I don't think we can really answer that question. Unfortunately, it's a good question. It's a good question. It would be good to know, but yeah, we would need we would need additional data and more time to be able to answer that. Okay, so there is a question. So I will. I don't know how to reformulate it. So I will ask the person maybe if possible to reformulate if Phasy you need that. And the question is if there is a measurement of indebtedness of participants. So I suppose by participants what the person means is the participants to the survey, the participants that were interviewed within the research study. Yes, so great if the person can confirm that. And the second question is what is the percentage of income? So it's a very specific question, so I guess it depends again, but if you can give us an idea, what percentage of income is used to repay outstanding loans?
So it's really great questions, and it's more eligible for the, I think, like household surveys. We didn't really look at the percentage of, so first we didn't really look at the level, the magnitude of the indebtedness. I don't know if they want to know about the average loan size or
I think
what is yeah.
I think if you want, I mean, it can make sense. It can be useful to kind of share, what is the average loan size that you have seen, and then how much percentage of income those households use in order to repay that loan. That would be interesting, Phasy.
So I think from our sample size, I would say most. I don't do the average. I think most of the loan size that we seen is maybe between 3,000 to 4,000 US dollars. And for the percentage of income, the exact percentage, I would not know because I didn't measure this research doesn't measure the exact percentage that they use to repay the debt, but what this research find is that we felt that the big portions are mainly the male incomes, like the husband or the male family incomes, let's say engaging in like constructions who earn $12 per day, something like that. Those income will be saved up to repay the debt, and then the woman income will be used to cover the daily expenses. Yeah,
yes.
But the actual percentage, I don't know.
Yes, I think it's difficult again to give exact percentages. It would depend, I guess, really it's on a case by case basis.
I think you can do that with the household, like with the household survey, you can get exactly the percentage of the incomes and how much it used to repay the debt. And that's probably something I will do in the close futures, nearer futures.
Yes, the near future. That's good, Phasy. How are you doing? Are you holding on? There are still a few questions. I think it's very good question and very interesting question and answer. Are you okay, Phasy?
Yeah, I'm okay.
Yes. Okay. Let's continue. So another good question related to unregulated lending or informal lending, right? And the person would like to know how unregulated lending adds up negatively, let's say, or it's having a detrimental impact on over indebtedness. So that is not something I believe the research has been looking into, but it would be good to kind of get your views on that. How, to what extent you feel informal lending or unregulated lending adds up on the over indebtedness. And that would be difficult to say, but maybe to what extent you feel that unregulated lending is really the one putting the pressure on the borrower versus the formal or regulated lending. Okay, so that's maybe the first question. And the second question is from the same person. Do you know in your sample borrower how much of them may have had relationship with informal lenders? How many of them may have had access on top of formal microfinance institution loans, informal loans given by different actors that are not part of the official MFIs. Is that
how many
clear?
of them have taken out a loan from at the same time? Taken out the loan?
I guess it would be helpful, Phasy, if you can say from your observation, how many of them were maybe accumulating a loan, at the same time of a formal MFI and unregulated money lender? How much of them were maybe mainly subject to a formal MFI loan and not so much trying to access informal money lender money? If you have an idea, of course, I see. If there is anything in your interviews that would allow you to assess that.
What happened is that they go together, informal lenders and formal lenders. So they're depending on each other. What I mean is that from the case that I observe, sometime at first the households will be indebted to the informal lenders, and then they think it's a good idea to switch, and they took the loan to repay the informal lenders, and now they indebt to the formal lenders. But because the formal lender have more strict in terms of repayment schedule in compared to the informal lenders, so then when they could not earn the expected amount of income to meet the debt repayment, then they have to go back to the informal lenders to take out some loan to repay for this, to fill out these short gaps of financial need. And then when it reached the end of the loan cycle or loan maturities, they're gonna borrow again to repay whatever the debt they have with informal lender or another formal lenders. They repay all of this and they now just have one. But then the journey go again. Then they will do exactly the same when they could not find enough income to repay. And so I would say almost all of people I talk to can access both informal and formal loans. The exact numbers of household, I don't know, but I know that many have both debt, formal and informal loan. So in this case, it's hard to say how much the unregulated sectors add up to the overall levels of indebtedness. But one thing that I can say from my fieldwork is that for many people that we talk to, it seems like it has been found. This finding has been found almost a decade ago, I think, by Trenken and Oversons, saying that the formal or informal money lender is more more flexible than the formal money lenders. And this has also been shown during the time of my research. So I will give one example. One guy, he's indebted to formal and informal lenders, but he's feel more comfortable to negotiate with the informal lenders because maybe he have closer personal connections with the informal lender as compared to the formal lenders. And majority of people are scared to go and talk to the formal lenders. This is what I like to highlight, and they shouldn't be scared to go and talk to the formal lender or formal institution when they face problem. But that's not the case in Cambodia, and that's something we would like to see in the future, that more and more people can go forward and feel more comfortable to go and talk to the informal lender, so that, you know, it won't be too late for them. Yeah.
Yes, thank you, Phasy. And I remember actually in one of the discussions that we had with different stakeholders from the microfinance sector, was highlighted that there is a behavioral bottleneck, basically, that can be changed if there are a supporting program that helps maybe those borrowers to address, and we know more or less, right, the issues related to, there is a bit of shame, there is a bit of fear because of kind of hierarchical relationship. I think you mentioned that, and that's very interesting actually in your report. And those are as well the type of response that non-profit or NGOs in Cambodia can help addressing, right? How you can maybe raise awareness and educate borrowers and work hand in hand with the MFI to do so. So yeah, thank you very much, Phasy. I think it was clear. And again, if the person that asked the question have follow-up points, please do raise those. Related to that, to that discussion as well, there is another good question related to the mission drift of microfinance. So in the report, we have touched upon we have shared, right? You have shared that microfinance is, you know, not a new sector, not a new industry, so to speak. It has been in Cambodia for already 2 decades. So what could be done in order to correct, or in order to maybe in order to put back in the center the social mission of MFIs? If we all remember, microfinance sector at the beginning, at the onset, was supported to really provide access to finance for the most for the population that were excluded from the sector at that time. You know, it was mainly formal banks, and that's the whole story, in fact, with the emergence of the microfinance. So how could a few of them today still have that social mission, right? You have seen that through your interviews, not all of them, definitely. So what could bring back that social mission at the core of those microfinance, and how this is relevant, right, in time of COVID-19 crisis, where now maybe, of course, that needs to remain profitable, but that needs as well to think about how to shield the customers that I have that are the most vulnerable.
Yeah, thank you for this question. It's put us in a bigger pictures of the microfinance sectors now. Like we have, yeah, like we have talked in the reports, like, so when the sector is small, you have different investors, and then when it grow bigger and bigger, it's attract different kinds of finance and shareholders, basically. And the question is, like, how much the shareholders want to keep those social mission in comparing to the grow, like how much flexibility the microfinance sectors have in order to keep those social missions. I think one of the, I got the opportunity to talk to one of the CEO of the small microfinance, which is, I think for me, it's really good. And he's explained to me, well, how much like they didn't get the pressures from the shareholders to grow in a way that it will hamper their social mission. So if for me right now, the thought that come into my mind, like the most important actors would be their shareholders, and they have to hold the microfinance institution more and more accountable and to reinstall the social missions which they promised to deliver, which is to alleviate poverty. Yeah. And also, yeah, the government regulations. It's to I don't know, to limit the kind of finance that can flow into the country. Yeah.
Yes, thank you, Phasy. And I think it is a very good and a fundamental question. As you said, Phasy, this is really a high-level question. But one, maybe in my opinion, that actors do not focus enough on. As you said very rightly, I don't think that the microfinance institution can be the only one answering that question, right? It has to be a discussion with them, with the CEOs and the operating team in Cambodia, their shareholders that are not all in Cambodia, but sometimes, and there are multiple of investment funds that are part of the shareholding structures of MFIs, right? And maybe they have different opinions. So it's not an easy an easy answer. And more importantly as well, most importantly, I think the current crisis may impact them too, right? I don't know to what extent, because I don't have access to their financials and their KPIs, but it would be interesting to, kind of have a full picture and really understand where there are possible push, little ones, but that can really improve again that social mission side. So that's another discussion in itself, right? It's a very big discussion, and it requires as well a different type of information. So, okay. Next question. There's still a few, and we still have a bit of time. Are you okay, Phasy?
Yeah.
We can take a few more? Okay,
yeah.
Thank you. Thank you, Phasy. Okay, so, okay. So one question is, I remember this is as well a point that you covered. Have you seen any example in another country of an actor like the NBC, so a public sector regulator, creating a clearinghouse of data on local lending? Have you seen that maybe in a neighboring country or in a country in Southeast Asia?
Southeast Asia, I don't know, but I think I was talking to the supervisor, the academic supervisor for this project, Marian Boylander, and we were talking about this. And I think the US, they have like something like this.
Okay.
Yeah, but
okay.
in the Southeast Asian, I didn't really look at. Maybe there is, but I didn't look at it closely.
Okay. Thank you, Phasy. So I guess this is a possible lead for regulators or NGOs or other actors to look into this and to look how it may be applicable in the Cambodian context. That is something that could be useful. Okay, thank you, Phasy. There is another question related to the history of microfinance in Cambodia, when it started, etc., etc. I will not answer that question because I would rather recommend all participants to read the report. This is well explained in the report, in the introduction. It's very comprehensive. So please go through the report and you will find all that information available. Thank you. So there is a very specific question related to the conditions. So the person wants to know what are the conditions for a loan restriction interview? Or I guess what are the conditions that a borrower needs to meet so that, yeah, what is a loan restriction interview? I'm not sure what that means. What are the conditions for a loan restriction interview? Yeah. Okay, so actually, maybe I can ask that person, Mr. Kosal, if you could please clarify your question, please, and type maybe type it again, maybe, and by mentioning what do you mean by a loan restriction interview, and we will get back to you. Thank you. I'm moving on to the next question. What is the percentage of respondents that have had their loan term restructured during your study time period? What is the, how, yes?
23 divided by 119, so.
Say that again, Phasy?
23 people or households receive some forms of loan restructures.
Okay.
So the total case is 119, so 23 divided by 119.
Okay. So yeah, so let's say about 20%. Let's say about that, right? A bit more.
23 divided by 119. Yeah, about 20%.
Yeah, something like that.
Your math is really good.
No, I'm just lucky. Okay, so good, Phasy. Thank you. So that's the answer. Okay. Okay. So based on your personal point of view, to what extent the immediate response from MFI is successful in helping the debt distressed household? So I think that is a point that you touch.
Yeah, like I think I have shown in the arrows.
Yes.
Like this loan restructuring policy itself, you still have the money to repay it, and let's say some still have $50 per month to repay, and if you can't really earn anything at all, so you can't really afford. But it's helpful when it's with the combination, especially for the most vulnerable household who have the ID poor card. So what happened is they received the money from the government, and because the amount of repaying the debt is really small, so they use the money that received from the government to repay the monthly debt. But if it in itself, they still have the money to repay. And like we talk in the presentation as well as in the report, the most option that they give is grace period. And grace period meaning that just repaying the amount of interest rate. So in the long run, it's increased the total cost of the loan. So in this case, like we say, people feel that they don't want these options. It's a financial loss for them, or in Khmer we say it's card. Many people say it's card they don't want, and so they're still struggling. They don't take this option, and they rather struggling to repay the full amount. So if the only option that's available for people is grace period, it probably not super helpful.
Maybe we're going to take the one of the last question. We are almost reaching the end of the webinar. So so the question is, who determines a borrower's eligibility to default? So there are many questions. Is borrowers being protected after declaring default? And how the bankruptcy law could be applied to help borrowers during COVID-19? All right, so to help maybe to reformulate? You want me to reformulate or you good?
No, I think I understand the questions.
Okay, good. Thank you. Okay.
From our interview during the time of our research, we don't see anyone who received like some sort of a process that they can declare the personal bankruptcy law. And I don't think this process is itself at the moment is accessible for the individual. And I don't even know if it's accessible for the big business. So yeah, so that's why in this report, we would like to see that this personal bankruptcy law will be established. And when it's established, then we can talk again. How does the implementation work? But now I don't think we have personal bankruptcy law yet.
Thank you, Phasy. I think that's very clear, very clear. Okay, so that was maybe the last question for today and for Phasy. So I'd really like to thank Phasy very warmly for all the work and all the energy and all the passion that she put in conducting this research report. CKS and myself, we have been really proud to have been able to work with you, Phasy. It was really a pleasure. And thank you as well for the time that you took this afternoon and to present and to answer with patience all those questions. Very good question, by the way. So thank you as well to all the participants that join us in Cambodia and from abroad. We really appreciate the time you gave us. We hope you found the webinar interesting and we can continue the conversation offline. I wish to remind you that the recording of this webinar will be made available on CKS website as well as on our social media. It will be done in the in the coming days or weeks. And please do register to our newsletter, the CKS newsletter from CKS website. If not already done, you will be able to receive all the information about our latest research and activities. Please do feel free to contact me or anybody from the CKS team. Our email are on the website. They are public and we answer all of them. So please do feel free if you have any questions. And thank you very much. And thank you, everybody. Thank you as well to CKS colleagues that helped facilitating this webinar. And I wish everybody a great afternoon and a good coming weekend. Thank you. Akon Chan.